Welcome, folks. This is Tom O'Brien of TFNN. We're broadcasting live today, beautiful Manhattan at the Hard Asset Show. Our guest today, Bob Archer. Bob is the President and CEO of Great Panther Silver. Great Panther trades in Toronto under the symbol GRP, trades in the U.S. and in New York as GPL. Bob, welcome back to TFNN.
Thanks very much, Tom.
How you been?
Great, great. It's been a great year so far.
Oh my God! I mean, tell me, you know what I'm saying? How you been? I mean, how can you not be great? Last time I was talking to you, we had silver maybe about 17.20. You know, it goes up close to 50. It's pulling. It's about a 37 right now. For the new listeners, tell me about Great Panther. Where do you do business?
Great Panther has two producing mines in Mexico, so that's our main area of operation. And we're looking for other projects down there as well as expanding into elsewhere in Latin America.
You know, the history of a Great Panther, how did you get production going so quick?
Well, these were past producing mines,
okay.
And that's essentially what we were targeting when we started the company.
Yes.
Because we did want to get into production quickly, and we didn't want to go through the whole business of exploring, finding something, and then
right.
You know, the 5 to 10 year time lag.
Sure.
So we targeted mines that still had a lot of potential, but basically had been undercapitalized in the past, or
okay.
else perhaps closed down because of low metal prices.
Right.
So that's what we did, and so we acquired two mines and got them back up and running pretty quickly.
And inside that business, right, you get the ore out of the ground, of course. Inside the ore, we get the silver, right? And per ton, how does that work? What are you getting out per ton?
In terms of grade?
Yes, yes.
Well, at Guanajuato, the silver grades are running around 250 grams per ton, and
wow.
Gold grade is sort of ranges about 1.5 to 2 grams typically. And so, yeah, I mean, the two combined give pretty decent grades. And at our smaller mine, Topia, it's more polymetallic. So silver grades there are very high, about 450 grams per ton.
Okay.
We get a little bit of gold, about half a gram or so, and then about 7% combined lead zinc as well. So it's a very high grade operation at Topia.
And, you know, of course, politically, that's a great place to do business, right?
Yeah, Mexico's a great place. It's very mining friendly. You know, these mines, well, the Guanajuato mine has been in operation for more than 400 years. So there's a tremendous history of mining in Mexico, and the government is very, very supportive of mining.
When we look at a mine that's 400 years old, right, so I know you talked about that you got it because we had lower metal prices, right? So I guess through the years, that's what ends up happening with mines, right? The metal's still there, it just matters what you can get it out of the ground for and what the price is, I guess.
Yeah, that's a big part of it. And you know, in Mexico, as in other places in the world, a lot of the companies that owned and operated these mines were private. They didn't have access to capital markets, and so the mines, which is mining's a capital-intensive business.
Yes.
Right? And so these mines have always been undercapitalized. These guys never had the money to really put back into the operations, to expand, to do the exploration drilling, to find a new zone that's going to keep the mine going for another 10 or 20 years. And so they just, you know, they run on hard times with perhaps low metal prices, and the mine's forced to shut down,
sure.
and that just creates an opportunity for
amazing.
us. Yeah.
Now, background, you're a geologist, right?
Yes, that's correct, yeah.
So when you look at the geology, it's pretty amazing that when you look at Mexico, that they can have so many minerals and so much silver for so long, right? I mean,
yeah.
And how does that work, though? I mean, where does that come from? Like, what's the thinking behind as to where that all came from?
Well, there are various theories, I guess, but probably the most predominant one is that it goes back to continental plates and how the continents shift and everything.
Right.
And as the oceanic plates are pushed under or subducted under the continental plates,
right.
those rocks basically melt under heat and pressure, and then they get forced back up to the surface as magma, I guess you could say, through cracks and
yes.
such, and form veins and ore deposits because they're carrying the minerals with them from the melted rocks.
So that's pretty cool. I mean, one of the best books I ever read was Alaska, and that's when I really got to learn about, you know, the plates and how it works. So the magma that's coming up, that's actually taking all those minerals up, and then whether it's a million years later or whatever, that's how they get deposited.
Yeah, more or less. Yeah.
Amazing, absolutely amazing.
Yeah.
You know, the run up in silver. I mean, I know you got this mine at the right price. You know, you've been producing, thank God, right? I mean, it's a whole different number when you're producing.
Oh, absolutely. Even when you've got the cash flow, you can really take advantage of the high metal prices.
Right. Now, for a mine operator, the fluctuations every single day. When you have silver comes out of the ground, do you sell it every week, every month? How does that work? How do you know if you can bring us through that timeline?
Yeah, well, we sell our we produce concentrates at both mines, and we sell the concentrates to metal traders.
Right.
And so that's done on typically an annual contract, and so
I get it.
It's set out that way, all the terms and conditions and everything.
I have it.
And so we deliver it to them at one of the ports in Mexico.
Okay.
And that's basically where it changes hands.
Right.
And you know, we assay the shipments. We assay it, they assay it.
Yes.
So we know how much metal is contained in every individual shipment.
Right.
And we get paid on the metal content, and then they subtract their costs for for shipping and ultimately the cost for smelting and refining and everything, because they put it on a ship and send it overseas to a smelter.
Exactly.
And then they have their charges that are passed
and
back
so
down the line
it's a
and
sliding
so on.
scale.
So it is kind of it's typically we would be paid on the pricing on the metals reflects the average price for the month or the 2 months following delivery. So there's a bit of a formula there, and so if prices are going up, of course, that works in your favor. Right. If prices are going down, then you know it works against.
The neat thing is though that you don't have to trade it; that it's a sliding average.
That's kind of the idea that it averages out over time. So you don't have to worry about daily fluctuations or anything necessarily.
Which is huge.
Yeah.
You just know that. When you started with, well, actually, when you bought that mine, what was silver at then? $5 or $6?
Well, when we got the first one, I mean, we initially negotiated that deal in 2003. Just before we launched the company. So it was less than $5. It was like $4.75 or something like that. And then in 2005, when we bought the second one and completed the deal on the first, silver was around $7, $8, I guess, something like that.
Amazing.
So certainly it was a good time to get into silver.
Right.
Business,
And the mines themselves, how long? What is the lifeline of them?
Well, that's something about underground mining that you know you basically are increasing the mine life all the time, because you know as you're going down in the mine and expanding laterally, you're continually drilling and finding new zones and expanding existing zones and so on. So when we started mining at both of these operations, there were no resources at all whatsoever. So you could effectively say that the mine life was zero. But of course, you know, through our own assessment, we knew that wasn't the case. Right. And the mines had been going for a long time already, so we had history working for us as well. So as we drill, as we continue working, we just keep expanding the mine life. So even though our production's increasing, so is our resources, and the mine life is actually increasing now as well. Right. So the smaller mine, which is a little bit more advanced in that respect, is actually up to about a 15-year mine life now. Amazing. And the more we drill, the more it increases.
Because as it goes down, it does go wider too. That's what happens, right?
Well, and just that as you go down too, that you're surrounded by solid rock, so it's difficult to drill that from surface some of the time. I see. And so you have to make your tunnels for your drilling stations, and then drill down deeper. You know, once you establish those working areas underground. So it's it's a bit of a process, and it takes time, but you know these are significant deposits, and you know they're not going to be finished anytime soon. And you get a significant price. Absolutely amazing. Yeah. Well, listen, we really appreciate the update, Bob. Look forward to having you back again. Listen, folks, it's Great Panther Silver. Come over to our website at TFNN.com. You can hit the banner right there. This is Tom O'Brien. This is Bob Archer. Have a great one. Have a safe one. Look forward to speaking to you again.